If you're a business owner, most of your mental bandwidth and most of your days are probably taken up by making sure that your customers or clients are happy, that your work is getting done, that your employees are also happy, and that at the end of the day, you can run and operate a successful business. Probably not at the top of your priority list are things like financial planning, looking at how to separate or optimize both your business and personal balance sheets. But I would actually suggest that maybe you should give some thought to both at the same time. If you haven't given a thought to things like tax planning, estate planning, or things like that for your personal assets or your personal financial planning, totally understandable. And that's why this video is going to highlight some key points I would suggest are really, really important for business owners to take into consideration as they're operating and owning their business, eventually likely exiting their business at some point, and making sure that they're protecting themselves along the way. First and foremost, and maybe the most important, is to have an estate plan in place. Businesses in general are not like opening a retirement plan at the local bank and having a CD in it. There's a lot of complexity. Obviously, you're employing individuals. It's probably the biggest asset that you own, not uncommon for that to be the case. And it's likely the asset that is supporting you and your family and is potentially even your retirement plan to sell that business. Having an estate plan in place is critical for business owners. The reason is that if you wake up tomorrow and meet your maker on the way into work, the question immediately has to be, who is going to own and operate the business when you are no longer around? Is it going to be your spouse? Is it going to be your partners? Whoever that is, those decisions are not something to be made when you are not around if you own a business. Having an estate plan in place effectively coordinates how your assets transfer to individuals, family members, spouses, children, what have you, and ideally coordinates with something like an operating agreement or a partnership agreement that you have for your ownership in the business. Having things like buy-sell agreements in place that give your partners right of first refusal or other shareholders right of first refusal can be really important in making sure that the business can continue to operate if it needs to, or if the surviving spouse or what have you needs to sell or liquidate the business, that they have the financial runway and frankly the financial ability to do so, the ability to sign checks, to execute on the business, to make sure that they can find a buyer and that they have the time and flexibility and financial runway to do so. Hand in hand with estate planning probably is some amount of life insurance, or what we call key person insurance, can be important, especially in that latter case study where, let's say, a surviving spouse needs to, maybe they're not as involved in the business as you are, they need to do so in a fairly short period of time. Having that extra life insurance, having that lump sum payout can be really beneficial in easing that pressure and providing some financial runway or some capital to infuse into the business for some period of time that it might be needed. Another important element of an estate plan is not only if you pass away suddenly, but what if you are incapacitated or become disabled and you're no longer able to do a lot of the same types of tasks or frankly make the kind of financial decisions that you had been previously. It's not uncommon for small or medium-sized businesses to be reliant on the owner to wear a lot of different hats. If suddenly you can't wear some of those hats, is the business able to continue on in the current way that it's doing? Do you need to explore a sale? What is the situation going to be as a result of that? An estate plan can be hugely important for dictating what should occur if you are in a coma or if you're incapacitated for a week or something in a hospital bed. So estate planning in general is admittedly a little morbid, and it's not something that people want to think about, especially if you're trying to grow or operate a business. The last thing you want to think about is, what do I do if I'm not around? But if there are people that are reliant on you to run that business, whether it's employees, family members, kids, spouses, what have you, having an estate plan in place to protect those individuals, to offer them flexibility in a time that's really hard, can be hugely beneficial if done prior to when it's needed. So starting off with the warm and fuzzy estate planning, we'll move on to separation of business and personal assets. Early on in a business, there's just going to be a natural overlap between your personal finances and that of the business. If you are acquiring a business, it's probably easier to channeling communications and different financial aspects of the acquisition through a fund you've created or some sort of LLC or entity that you've generated for the sole purpose of acquiring the business. Sometimes that's not the case, but I think having a clear delineation between your personal finances and that of the business is something to aspire to and try to get to as quickly as possible. There's a lot of reasons for that, but one of the biggest ones is essentially shielding your personal assets from potential liabilities that might occur from the business. whether it's creditors coming if you run into financial troubles in the business, for liability protections if the business is being sued, for example, that ideally, not guaranteed, but ideally their personal assets are shielded from any of that liability. That's kind of the objective or goal. Taking steps to kind of differentiate the two, whether it's creating business bank accounts, making sure you have set controls or rules around when is a business credit card used versus your personal credit card. And obviously those rules are set and followed by all members of the business, can be really, really important for longevity of the business in general and for really protecting yourself as you grow your business and that increased potential for liability starts to arise. The third one I think is just really important to consider and probably is kind of cliche or sounds really straightforward, but is harder for a lot of business owners. It's just sitting on cash. In personal finance, you call it building an emergency fund. And candidly, for a business, the difference between someone's personal finances and that of a business in this instance are not that far off. Typically 3 to 6 months of operating expenses in general are really good to hold in cash. Business owners in general can benefit from large cash holdings just because you never know when a job is going to go south, or you're going to lose an employee, you need to hire someone on, or make a big decision or change or what have you. Certainly debt is an option for business owners, but as we've seen over the last 3 years with interest rates increasing relative to what they were throughout the early 2000s, suddenly taking on debt like that can really crimp cash flow over the long term. And so if you have that kind of cash buffer in place, especially now when you can get decent yields on cash, it's not as bad of a thing and really offers you almost like an insurance policy for your business and kind of a cash buffer, if you will, for allowing you to operate the business without the stress of having to take on debt in times where it's really needed. Certainly that won't be the case for all businesses. Sometimes a line of credit is just a necessity, especially if you have a really seasonal business and you want to retain employees through those off seasons or off periods. Having a huge lump sum of cash for 12 months might not even be possible. But I do think over time, that's kind of an aspirational goal a lot of business owners might consider taking into account, and that it can really be beneficial to avoid kind of hiccups, if you will, or taking on kind of high risk, high interest rate debt that can cripple the business over the long term. So our fourth topic is really just kind of like understanding your tax obligations and just tax planning in general. The nature of owning a business sometimes is that maybe you have a nice even income stream or revenue stream from your clients or your customers, but maybe it's just super lumpy. Maybe you literally make all your money 1 month out of the year. So it's very difficult to gauge, project, and plan around taxes. But if you're able to, it can be really beneficial to determine, do I need to make estimated tax payments? If you own a business, you probably do. What amounts are those? And if we can kind of dial it in more, maybe we're not having to pay as much to the federal and or state government on an ongoing basis, can hold back some of that cash to ideally reinvest into the business, to put to work, gaining some sort of yield and some sort of interest-bearing vehicle. Something along those lines. There are benefits, I think, to honing in more on your tax situation, having a good grasp of that, and having the ability to project out kind of what will my tax liabilities be come April or over the next 12 months to then kind of streamline things, if you will, for your business. Typically, the best time to kind of plan around that is often in the fall. You know, it's before the end of the tax year. You have several months to kind of gauge what your income might look like through the end of the year and then make moves based on what do I project my tax liability to be for the end of the year. And you can certainly plan into the next year, if you will, for what makes sense to make. Changes might make sense to implement, whether it's retirement planning or other approaches to reduce that tax bill over time. Tip number 5, the last one, is kind of just a thought around, I would call beginning with the end in mind. What does my exit strategy look like from this business? Am I taking steps today to kind of grow it in kind of a sustainable way that's going to allow me to expand over time? You know, not potentially, am I taking on huge risk now? What's the benefit of that? Is more of a slow and steady growth something that's maybe less risk prone, but can get me to a place I want to be in 5, 10, 20 years? And then on top of that, from an exit planning perspective, am I building out kind of the processes, the documentation, the things that are going to make me very attractive to a buyer or make succession planning easier for someone I'm passing the business on to, again, within that kind of 10 to 20 year time frame down the line? Those kind of steps certainly can take time and planning, there's no doubt about it, but can reap a lot of benefit for when you start to exit plan from the business. Effectively, if you, the owner, are able to walk out at the end of the day, on your last day that you're with the business, and the business can continue to operate, that makes a very marketable business at the end of the day. So if that is kind of the goal or objective, I think it kind of has to be, not necessarily like front and center in those first years or what have you, but whether it is some sort of exit planning or succession planning, starting to think through those things once you have kind of a fully feasible and upright business, that's something that can go a long way and can really benefit you over time. So that's 5 quick kind of financial planning tips, whether you are an SMB owner, you are an entrepreneur through acquisition, whatever kind of your approach to business ownership is. There's a lot of kind of considerations of kind of marrying the personal financial planning with kind of business planning in general. How do we kind of separate personal and business balance sheets and income statements? But then at the same time, as an owner, there's just an inevitable overlap of the two. And so how do we go about kind of differentiating those and making them both work together? That's kind of what my role is often for working with a business owner clients. I'm Scott Sturgeon, Senior Wealth Advisor at Oread Wealth Partners. We work with a variety of business owners, whether it's entrepreneurs through acquisition, or those who are looking to exit their business and move into retirement over the next 5-10 years, kind of the full gamut, if you will, on thinking through things just like this, whether it's to optimize or move towards optimizing a personal balance sheet away from the business, diversifying risk, removing that kind of concentration of ownership that you might have in the business, or really kind of whatever your financial goals might be. That's kind of what we're here for. So again, Scott Sturgeon, Senior Wealth Advisor, Oread Wealth Partners. Thank you so much for tuning in. Have a fantastic rest of your day.